either when you buy real estate as an investor, either you have all cash or you need to have a lender. I don't want to make it sound like lenders are undesirable. I started my career as a lender. Having a great one helps you understand the program, gives you more options. I'm really excited to have had a chance to introduce to you Dusty Lloyd from New American Funding. They're a huge company, very successful, but he's also has a few other niches in addition to running a team there. And so I want to share this with you today on our podcast. Hey, Dusty, how you doing?
Good, Bill. Thanks for letting me take some time with your audience. I'll talk about what you were alluding to, which is renovation loans. So a lot of times you're working on a distressed property, you want to list it, you have an owner, user, or an investor that wants to get the best bang for the buck to hold it as a long-term investment. We can allow them to buy the house, fix it up, all with one loan. There's an FHA version, which is called a 203K. A lot of people know about that. There's also a conventional VA version of that. And we did one. The most recent one I did was up in Crestline. They had been working on building a house there. It was about 3/4 of the way done, 90% of the way done. A lot of the stuff in there, but no floors, no kitchen, no bathrooms. And we were able to finance all the repairs, and they all got done after the close of escrow, which was a huge opportunity. Not most companies won't do that.
You know, the thing about this is that by looking at properties that need to be rehabilitated, you add more inventory. In a market where there's limited inventory, if you only look at houses that are financeable with conventional financing, that's a population. If you look at properties that can be brought to that level with some additional work, that adds more opportunities to you as an investor. And that's why it's so important to look at these renovation loans. What percentage of the business that you see are renovation and kind of hard money or private money or renovation type loans versus conventional financing? Seems to me like still conventional is about 89% of the retail market today.
Definitely. And the reason is listing agents don't want to go through the trouble. Right. And so I always tell them, you'll get more money for your seller if you get a financed offer. A lot of people are doing hard money on these distressed properties and buying them at a discount, or they're paying cash and then putting it on a line of credit at some point. That's a great way to go. It's clean. It's easy for the seller. It's easy for the listing agent. But if they want to extract the most value out of it, getting somebody who's going to live there, put their own sweat equity into it, that's the way that they can get the most out of it. And you're right. Most is conventional financing right now. And we'll do an ordinary conventional loan. And if they qualify for like a appraisal waiver, so we don't have to see that it's in nasty shape, that's one way they can get in. But doesn't always happen these days.
Just some real quick housekeeping. This is the official podcast for LA County Real Estate Investors Association. The website is LAREIC.com. And we host an event the second Thursday every month it's a free event in the West LA area at the Iman Center. We get about 250 people. We have great speakers every month. And we also have a vendor expo with about 50 vendors. I'm one of them. I'm there as a real estate broker. I'm there as well as a live caster to introduce you. And they have a chance to meet other professionals. So if you're interested, go to the LAREIC.com event and you can register. It's free. Upcoming in December the 14th will be Out of State Investing Summit. Great way to invest in properties outside of California. I know Dusty will talk a little bit about investing outside of California. He offers that as well. Our guest today is Dusty Lloyd, New American Funding, and there is his info with his 350 reviews. Wow. And phone number and email information, dusty.lloyd@naf.inc.com. NAF, I guess is how we refer to you, nafinc.com, and his phone number as well. So thanks again for joining us. So, you really hit the nail on the head, I think, when you said that realtors are hesitant, and yet I believe as a buyer's agent, I've been able to talk some into it when I can share with them not just the concept of the rehab loans, but the execution, meaning virtually every lender I've ever met says they do this product, but none have really ever done it. And I know you guys have like a separate division. I want to say it's in San Diego that like processes these and really does, I think, a great job on the 203K in particular loans. Talk about the difference between promising to do it and the execution that you bring to your customers.
Right. It has to be in your DNA. These are the most complicated loans we do at New American Funding. This and construction, and I do those too. Reverse is pretty easy, but people make them out to be complicated. The renovation loans are pretty much the hardest. So we're putting together, while we're in escrow, construction project, giving that to the appraiser, having them appraise the property after all the work's been done, so that we can put that money aside to get the work done after the close of escrow. It's tough, and you're right. Most guys did some back in the 90s, and they'll try and muddle their way through their first deal. It's kind of in my DNA. I worked at Prospect Mortgage. We were the #1 renovation lender in the country. I came over to NAF in 2012, and I ran the renovation department for several years until I took over kind of as a branch manager. And I've been doing a handful of deals every year for the last, since 2015. And that probably puts me at the top 1% of loan originators in the country doing these. I closed one last month. I've got more in the pipeline. And there's a big difference between saying, yeah, I can do them, and doing them every month. So it's a big difference.
The guy or gal who says I can do one means they once heard a seminar in their company saying that's a product that somebody in Indiana did, which is a whole different world than doing them here. So talk a little bit about
yourself, and knowing the person who runs it, knowing the post-closing people who are going to manage the questions after we close in servicing, and having a line of communication there, so it's not a black hole at Wells Fargo or someplace that will end up with the servicing. Good luck with you.
I don't think we can say Wells Fargo on the internet. I think that's this is a family-friendly channel here, Lloyd. Dusty, don't get me in trouble. So let's talk a little bit though. You just can't say, oh, here's a house that I'm going to buy for $400,000. I'm going to invest $150 and get financing for it. Like, you really have to have a proper contractor, proper estimates, proper paperwork. So talk a little bit about the distance from, hey, I have this project, I want to do a renovation loan, to actually putting together an offer that is financeable.
Yeah, that's a good one, because we did one in Kentucky, rural Kentucky, and it took 3 months for them to get a contractor who would do the $70,000 worth of work to redo the kitchen, the bathroom, take care of all the structural problems. There just wasn't somebody who was there to do it. In LA, Southern California, it's pretty easy to find a contractor who's willing to do the paperwork. They have to be licensed and insured, and we'll do some due diligence to make sure that they've done. You don't want somebody doing $150,000 remodel that's just done a few bathrooms on their own, and they'll figure it out. We want somebody who's going to get the job done. We'll do a little vetting out, but we need that bid in order to give to the appraiser. If it's a 203K, we'll have to have a 203K consultant go out and walk the job, make sure there isn't any stuff that the contractor missed. And it really works as a benefit. A lot of times people want to put them into what's called a limited 203K. It used to be called a streamlined 203K, where you don't need that consultant. But for a lot of these people, they've never done a construction project. So having somebody out there who's a consultant, they'll double check the numbers, they'll double check the scope of work. They'll look out for the home buyer and make sure that we're not going to end up in court in 6 months. We're going to get this job done. Everybody's going to be happy.
This is a big part that separates the wannabe investors from the real professionals, which is the professionals look to you as a resource to help vet the contractors, manage the contractors. The new ones, they pick a guy who they know, and the guy gets the paperwork and goes, oh, there's a lot of paperwork. I don't want to do this. I just want to do the job and get paid. Yeah. That's the problem. That's why you guys won't finance the job. And I think that anybody's looking to do a property and do a renovation and get it financed is well served to get a professional financer and use them. And I'll never forget, I went to Grant Cardone's program on multifamily. That's a different world. He's buying 200 unit and up projects, but he said the same thing, that he uses his insurance company, he uses his lender, he uses their internal processing as a way to double check his work to make sure he's not making a mistake. That's got to be a fine line for you, though, between telling the customer, hey, this deal you have doesn't make sense, it's too tight, which is good news. You didn't waste your money and get caught in a bad project, but maybe bad news that they're not getting the deal. How do you walk that line?
Well, that's a good question, and I have a good response for that. So when you're talking about doing these loans, you can go out and find consumers that want to buy something. It's better if you go to the listing agent and even layer up to the seller or to the institution that holds the properties and sell them on the value of working with somebody who knows, hey, if I start looking at it before you list it, let me give you kind of the roadblocks we're going to run into now as opposed to 30 days from now or 3 weeks into escrow or that kind of thing. So I really like to find the institution that holds the property or the seller or the listing agent and really get a relationship there, because that's where you can create a partnership and get deeper into this. And I've had a number of flippers and investors that I've worked with that hold the property. And if we're in partnership, then the consumer can come along for the ride and get more value out of it. And it's more of a trusted relationship. Like you were talking with Grant, he trusts his people behind him. And that has to be a partnership between the person doing the financing and everybody involved in the transaction. And that's why somebody who works in a call center in Ohio isn't going to be the right person to do one of these deals.
No,
their phone goes off at 5 o'clock and you can only get them in the office, and the processors haven't done anything that's complicated.
And on the flip side, I do get offers from people who get renovation loans and throw them together really fast, and they're disappointed when, as a listing agent, I vet them out and look at how many have you done, who's your lender, how many have they done, have they walked the property yet, show me your estimates. Do you have a contractor that's put this together? Is this just your ballpark? And you have to understand that I can't let a property get tied up. My job is to protect my customer, the seller, and probably the relationship with the attorney. And so on the flip side, I've never had a lender come to me on a listing like you say, hey, we've pre-done this property. This is our numbers. Would you be willing to work with us on the timetable it takes to do the job? But this is an actual game plan. I'd be all ears, because I would get more money for my seller. My seller would love to hear that. We don't often get approached. So I think this is a niche that requires more work, requires more preparation, patience, and such, but really is underutilized, and I think of great value to the customer as well as opportunity for the investors.
And I'm really grateful to be on here to talk about it, because every real estate office has had that water cooler talk where the listing agent in the office says, I had this property locked up for 3.5 months with a renovation loan and then it failed. And everybody else in the office is like, keep me away from that. I don't want that. And when they hear that it might take 45 to 60 days, but it'll get done, or we'll know it's undoable in 2 or 3 weeks, because we're going to treat it like a normal loan and we've done them before and it goes through a process. We can get a lot of that fear, uncertainty, and doubt out of the way and move on and help them get the most value for their seller or their institution.
And I'd say the number one thing I do as a listing agent is call the lender. And I've not had the pleasure of getting you at the other line. I've had the displeasure of some other person who doesn't know anything about what they're doing. They have no idea. When I ask them, give me a couple of properties you've done these on, because the public record information, I can look at them, and they can't give me a couple, the reason why. And so that's why I think to anybody on this call, if you're looking to buy property, you want to do a fix and flip, you want to use renovation loan, you got to use somebody who really knows what they're doing. And I would say Dusty definitely fits in that category as one of the longtime successful people of that niche in particular. Now, you also have another kind of whole area related that distressed, related that it's complicated, but different in that it's not necessarily the physical status of the property, but more the legal status, which is estate loans. How do you terminate that product, and describe a little bit for us?
Well, so an associate of mine does fiduciary loans, and that's where property is part of an estate and it goes into probate. Traditionally, that's taken 6 to 12 months. Now it's, anywhere from a year to 5 years if everybody's mad at each other. And he'll provide liquidity if there's properties, either to buy somebody out so they can get their money now as opposed to 5 years from now, get through a dispute. So if you know anybody who is an attorney that deals in probate, deals in trust matters where there's a dispute, we can help them get from here to there and get some liquidity. He's one of the better people in that market, and I've been pretty grateful to learn from him. And the goal is for me to do more of the trust issues where there's a better situation where the property's in a trust, the person passes away, there may be 6 heirs, and we need to pay some people off in order to get the trust closed so that they can release the property to the beneficiaries. And I think that's where my strong suit's going to be. And a lot of what I do is mediating these kinds of issues. And I think next year I'm going to start doing divorce mediation, just because working through these complicated issues of distrust, anger, all that stuff is something that as a culture we don't really do. And so if I can help kind of bring that all together, it's another way to add a layer of value.
So the loans are done to an estate that is a legal entity already, right? A probate, they have letters. And so somebody's authorized as the fiduciary of the estate.
Yep.
And they're borrowing money maybe to buy out if multiple partners, nobody has enough cash to pay out the others in cash. So you do a loan where each of the individual heirs gets their percentage in cash. And then do you refinance the property afterwards into a traditional loan, or is that loan done at a competitive rate that somebody could hold on to for a while?
Well, yeah. So it's either a irrevocable trust. If it's a trust matter, it's if it's in probate, it's an estate with a fiduciary in charge of making decisions. So the fiduciary would be signing off on the loan being on one of the properties, and it's a private money loan, so it's not the most attractive terms if you're looking at where rates are on a conventional loan, but they're not egregious. And after all the probate case is settled and the property gets given to the beneficiaries, then we put them in a more traditional loan. Once all the title issues and the trust or probate matters are handled, it gets a more traditional loan. And for my partner, when his transactions are done, they say, we're complete. Go talk to Dusty. He'll take care of you and get you in a more traditional loan.
So it's like a bridge loan for a year or two, all that gets done and then gets financed out. Can you share kind of what a range of terms might be for something like that for the attorneys or fiduciaries that might be listening? Or
yeah, so the latest loans we've been doing are 9.99%.
That's cheap.
Super
That
cheap.
is cheap. I've been hearing 12% of those.
Yeah, there's some points on it. It depends on the complexity. We'll figure it out as it goes. And the term is flexible depending on how it's set up. Usually these take 2 to 5 years. So that's kind of the time horizon that everybody expects. Sometimes they go a lot faster. Sometimes you've been arguing for 2 or 3 years on what's going to happen. They run out of money. Everybody just wants their money to walk away. One person wants to be holding the bag. We get them a solution today. 3 months from now, when the court hands the property over to the beneficiary and they have a settlement agreement, then we'll put them in a more traditional loan. And if they're in a good spot, the person left will get a great transaction out of it as well afterwards.
And what's a typical loan to value for a loan like that?
50%.
Okay. So if you have 2 or 3 heirs, you can use the money to buy out one, maybe some of the cash. Maybe the estate has some cash, not enough to manage all that, but the cash is distributed and you do a loan maybe for 50% for the rest. And then the remaining heir owns the property. And then once the matter is closed out, they refinance it and get a more traditional rate. That's the process I've seen.
Well, and you can write a settlement agreement that says they still hold on to part of their interest and clear up that interest after the property has been given up by probate or the trust matter and given over to the beneficiaries. Then we can do a more traditional buyout, and more traditional buyout, I've gone to 95% of the value of the home.
Got it. Okay, good. Hey, just go back to some housekeeping real quick. This is the LA County Real Estate Investors Association podcast. We do it every Tuesday, 3 p.m. We live stream this onto YouTube, Facebook, and LinkedIn. If you have questions, post them there, and I will try to answer them in real time or get back to them. And then this is associated with Lloyd Siegel's program, where we get together the second Thursday every month in West LA area. I guess kind of Rancho Park, Culver City-ish. At the Iman Center. It's free. We got about 250 people there. We have a great speaker and a vendor expo beforehand as well, where there's 50 vendors, including yours truly, and we live cast the event. The whole thing is free, and there's free parking if you get there early enough as well. And if you want to sign up, go right to the website, lareic.com, click on registration. This coming month will be on out-of-state investing. So for many people living in Los Angeles, or Southern California, it's a great event to go to, but you can learn how to invest in other states. So feel free to join that. Our guest today, Dusty Lloyd, he's branch manager at New American Funding. There's his license number, his email, dusty.lloyd@nafinc.com or nafinc.com, and his phone number, 949-371-5363. Thanks so much for being with us today, Dusty. So tell me, Dusty, do you lend outside the state of California?
That's a great question. And before I get into that, I'll just say I've been to some of these events in Orange County. I still have vendors and relationships with investors from going to these events. So a lot of people are hesitant to go. I would just say go if you want to be in this space. If you're in this space, you'll meet a lot of people that are way more experienced than you are that will give you some guidance. And as far as national, we lend everywhere except for New York and Hawaii. And we have a branch in New York and hiring a branch in Hawaii. So we'll be all 50 states by the end of first quarter 2024. So if somebody has an investment property in Ohio and they want to have somebody finance it, we can help you there just as easily as is in Southern California.
But NEF is also a California company. You guys are based in Tustin or Santa Ana?
Tustin. We've got 80,000 square foot headquarters in Tustin, buildings all over the country. I think we got about 5,000 employees. We service $70 billion worth of loans. So we're a big powerhouse, and we don't hand these renovation loans or any of this stuff off to somebody else. It's all us. It makes it so I have a lot of control to get stuff done.
Yeah, if you don't know New American Funding or NAV, it's because you don't know, because they've been around for a while. They're local. I've been to your corporate headquarters. Very impressive. You guys have all kinds of studios and stuff. You invite people to come in and use and leverage their business and partner up. So you guys really are a powerhouse in the area. So we've talked about the loans. We talked about the estate financing as well. Let's talk a little bit about the business side, because you've been in the business like me a while. We share kind of a similar path, some similar connections. You're a Prospect Mortgage and Joel Epstein. Like me, you see a lot of people come and go, a lot of people be successful, a lot of people not. For people who are looking on this call to build their real estate business to provide income as well as long-term wealth, what's the difference between those who make it and those that don't that you see? We all get the brand new guy who's all excited, or gal, and they flame out. And yet we also see people who, 5-10 years later have built a really nice business. What do you see as the difference between those two people?
That's a great question. Especially on the real estate side, you have a lot of people that think, I've got my license, I'm going to start making some money. Yeah. But I liken it to, we were talking with my father-in-law, who's a contractor, and he still at 65 picks up a shovel and digs ditches with his guys. There's a lot of difference between somebody who just shows up to the job site and somebody who's digging the ditch. And I say that when you're working real hard, going to events, knocking on doors, making cold calls to people who don't want your call, that's what will make you a successful realtor. One of my realtors, her big thing is she's Brazilian. She goes to all the Brazilian events. Wow. Everybody in the network knows that she's the person to go talk to. She's got an immigration attorney in that space. When people come from Brazil who are sports people or entertainers, they have to get a house through her. And so you really have to be strategic and think, what is my value over and above just I have a license, and start digging the ditches. And if you can find a way in this kind of market where there's no inventory, there's not a huge amount of transactions to make a living, those kinds of relationships that you build will create value to create the next 10 years of your career. And when it's easy, there's a lot of money to be made easily. When it's hard, like right now in the mortgage and real estate space, you got to pick up the shovel and start digging some ditches. And it's not fun or easy, but it means that when it is easy, it'll be more fun.
I heard a great quote yesterday from The Rock. He quoted Mike Tyson. It was a quote that really hit it for discipline, and it applies to real estate so much, which is really discipline is doing what you hate to do, but doing it like you love it. And I think it only works if you know that by doing it while you hate it, eventually you're going to love the results. Yeah. And so those of us who've door knocked or cold called or whatever it is you do, you build up that business over time. You don't have to love it every minute, but you have to love what you're creating for yourself in the long run. And I think if you can look at it in the long run, you have the opportunity to build an incredible life. If you don't, it gets really challenging.
Oh yeah.
How do you, I'm sure you've had great success in this business in terms of career, great success personally. We all see people who do really well and make a lot of money, and then they have nothing to show for it 5 or 10 years later. And other people who've built equity, whether it be their business equity or savings, investment equity. What do you see as the difference there? And what's a piece of advice you give to somebody to help them build long-term wealth rather than just make a lot of money?
Well, a lot of people say I don't have enough money at the end of the month to invest. And I tell all my guys, if you can put $50 away into a Fidelity account and start investing it in S&P 500 funds, that may be 3 years from now, 5 years from now, the start of buying investment properties, buying alternate investments. I have money in an apartment syndication, all those kinds of ways of building increased wealth. The problem that you see is maybe you have an influencer that's got a Lamborghini or a Ferrari and bought a $4 million house, and you think that success is buying stuff. That's not the case. The way to build wealth is to buy things that pay you money every month. And it's simple stuff, but you got to find people that are in that same kind of mindset and surround yourself with people that want to do that. And over time, you'll change your habits so that you're not thinking about, what kind of person shoes I should buy or what kind of car I need to get, and think about what legacy do I want to leave to my kids. And my dad passed away about 3 years ago. He was a super successful realtor. He retired in his mid-50s with some rental properties, and I got to see him leave me a legacy. And I want to do the same thing to my children. And it was not going on vacation every year and not having flashy stuff. It was about putting things into investments when the time comes.
Wow, that's a great story. My brother similarly retired on real estate investments and lives an incredible life, but very modest because he put money away, and he started very flashy. He was that guy who had the fancy Porsche, the fancy Mercedes, and kind of midstream kind of got clear on what he wanted to do and changed his life and has done real well. And I know for me, it resonates. When I hear Dave Ramsey say the new status symbol is the paid for car, the paid for house, that really resonates with me because it's given me the freedom to do things that I want to do with my business and life as well.
Yeah.
And again, Dusty, you and I both been around for quite a while. We've seen ups and downs. This isn't my first rodeo. It's not your first rodeo. I'm interested to think, what do you, I see a lot of real estate agents talking about the real estate market as though it is I guess like a storm that's going to pass any day. Do you see that, or is this the new reality? And what are you recommending to your team members and your clients as far as how to adjust to the market that's changed so much in the last year or two?
Yeah, no, it's a good question. We're all sitting on the sidelines wondering when is this going to break? And the Fed's been really aggressive at letting everybody know rates are going to stay high for a while. And we saw the CPI numbers come out last week, and that drove rates to come down a little bit. But it's not enough to get people to list their house. And I do the math with people. They're like, I want to go from $1 million house to $1.4 million. Household size is bigger. What's the numbers going to look like? And we go through it. Your $5,000 mortgage is going to be $11,000. And they say, well, I don't want that. What is going to be required is rates are going to need to come down enough that guy who has 4 kids and is living in a 2-bedroom condo needs to sell, regardless of if their mortgage payment goes up double, 1.5 times, whatever that is. There's a rate that people will start moving when they're motivated, and we need that to happen in order for it to change. And in the meantime, you're going to have to start digging ditches. I don't know when that's going to happen. I would like to think that it was going to happen last May when inflation started coming down. Didn't happen. Inflation is coming down a lot more now. It's still not. We still are at record high rates of 7.5 today. Yeah. I hope it'll be 6%. Maybe it'll be 5%, but I don't know if that'll happen in a month, 6 months. If you can stay the course and find a way to keep building referrals, you'll make it through to the other side. If you can't, it'll be a tough winter and there'll be no Christmas presents.
Seems to me, I don't mean to be argumentative, and I'm not really in the prognostication business, but I think we're in this for a while. I don't see the things that cause rates to go up. I don't see those changing in the next 6 months or a year, if ever. And so I try to tell the agents of my team, this is the market. This is the new market, and you got to find a way to get through that. So
Mhm.
what are you seeing, particularly amongst your real estate investor clients and real estate agents? What are you seeing that they're still growing and thriving in this market? What are they doing differently? Digging ditches, I get the motivational part. Is there any
Yeah.
particular activity, or is it just whatever it is they're doing, they're just doing it better, harder, and faster?
Well, somebody who I have a long relationship with, Alex Vargas, he does mailers to people who are deceased and still getting properties that way. The gold is the acquisition, and it's not easy to find.
Right.
I tell agents, they're like, I want to find a distressed property. I'm like, well, go knock on doors of people who have the weeds that are 4 feet tall.
Yeah.
And if they say, well, I don't want to drive around and waste gas, I'm like, well, then it's not for you. Alex is dropping mailers, buying lists, dropping books, doing all that work. And you really have to be a specialist. It's like you really focusing on this space. You're not halfway into it. You're not dipping a toe. You're doing a podcast. You're really engaged with all the investors and the vendors and helping put on this type of event. That shows that you care about it. And it's more than just, hey, I'm looking for a transaction. And like in the mortgage space, we're based on serving underserved borrowers, Black and brown communities of color that need a little extra help and education. That's what drives me in the morning, as opposed to, oh, I'm going to be able to afford a Lambo. And that's the difference. It really has to be a core thing. And not everybody's going to watch this and say, this is what drives me. But you got to figure that out. And sometimes it takes months, years, whatever it is. In the meantime, you have to be out there doing the work until it shows up for you.
And I know the founders of your company are Hispanic, and more than that, very involved in the NAREP, National
Hispanic
Association of
Realtor
Hispanic.
Association. Yeah.
There you go. Like they're like in all the way. And I think that's the thing that and I saw them that way, I want to say 10 years ago. I don't know how old the company is, but from the beginning,
yeah,
from the beginning, they were both feet all the way in on that. And I'm not Hispanic. I grew up in a high school that was half Spanish. Yeah. All the cute girls were Hispanic. I speak Spanish because that's how I chased them. Love Mexican food. Like I'm legit from the barrio, but I feel comfortable in that. But I always admired that they were so all into, it doesn't matter what it is, it floats their boat. Like they're excited to be in it. It's obvious when you see her, Patty, she lights up at those events because she's helping the next person in line behind her. And I think the lesson is not necessarily that NARP is the right solution, but find your right platform and just work the hell out of that.
And, I'm obviously not Black or brown. I'm a Jewish kid from Orange County. And
there's two of us. We're both two Jewish kids from Orange County. We're probably it. But anyhow, go ahead. I'm sorry.
And my dad, he grew up in Bixby Knolls in Long Beach, and he went to Poly High like Snoop Dogg. And he used to say, if it weren't for slavery, we'd be the people who had gone through that same kind of turbulence we did thousands of years ago. And I hearken back to that a little bit. I'm on the board of the New American Dream, which is helping people of color get educated to increase the level of home ownership. And Patty's been doing this for 20 years. We're the largest Latina-owned mortgage company. We're private, so it can be a part of our DNA, and it's different than somebody who I think what the other big lender in Orange County. He's more worried about how big a house he could buy. That's the drive. That's it. Right. And when you don't have kind of a rudder guiding you, it's really easy to just go all over the place and create a turbulent wake behind you that seems to mess things up.
And again, I've seen Patty motivate so many, in particular, young Latina women in the business, mortgage lenders and or realtors, some who work for her company, some who did and left, some who don't work for a company, but the movement, she's every day pushing that, and really such an inspiration to, in particular, those women. And I'm not Latina or a woman. I don't identify as one either. But I find inspiring her commitment to her cause. And I think that we all should find whatever our passion is and whatever our call is, and use our platform as best we can to support that. So again,
good to have that rudder.
I think obviously they've built a huge company, and that rudder has been focused on that North Star, I think, the whole time.
Yeah.
Fantastic. Well, last question I want to say is, it always strikes me now. I do take off certain time for holidays. I'm off next week for Thanksgiving. Take my family on a trip. I'm Jewish. I have other holidays during the year I take off.
Yeah.
I don't work Christmas Day, but I do work the day before. Maybe if I was Christian, I would need more time to get ready. But I don't need all month of December. I know that like I do, real estate agents, mortgage agents, investors struggling to make money, yet they take like a 2-month vacation time between now and like
I call it
January.
hibernating for the winter.
And like it ends like in March, right? Because once you get off track, I wouldn't know. It's hard to get back on. That's why I don't get off track. So what would you say to those people who are struggling, looking for something, and they're going to say to you, but Dusty, nobody's working right now. Nobody's in the office. Nobody's returning phone calls. What do you say when you hear that?
Swim upstream. If everybody's afraid that the market is going to get in front of them, get in front of the market, go knock on some doors, call some people, call your friends and family, tell them you need a transaction this year. Your kids aren't having Christmas, whatever it is. Just be aggressive. Don't be inauthentic. I know some people who do that to try and muscle their way into transactions, but let everybody know, like, you're here to do it. If you're not doing it, somebody else will. And not everybody thinks that way. And so everybody's got to be out there working. And that's what I'm telling my team.
Excellent. Well, look, we're lucky to get insights from you as a team leader, as well as a mortgage lender and a longtime successful participant in this business. So Dusty, thanks so much for spending time with us today, and look forward to continue to work with you going forward.
Thank you so much for having me. I've seen you from afar doing these podcasts, so it's a pleasure to be here. And anything I can do to help push forward, let me know. And let me know about the next event. Send me an email. I know it goes to your distribution list, so I want to be a part of that. I'd love to join either in December or in January, because, like I said, those events have provided relationships that I still use today that I haven't gone to an event in 3 or 4 years. And I still have relationships from those events.
Well, this one's like 5 minutes from my house. So I have to be honest, I don't go that far out of my way. It's once a month. It's only one day out of a month. So I don't make it sound like I'm working all that hard, but I do think this particular event is great. But again, Dusty, this is very helpful today. The founder of the LARIC event says, we need 3 things. We need coaching or mentorship, which I think you've done with us today. Mm-hmm. We need a community, and I think you've helped us get a look into your community. And then we need education. You've really shared with us some great insights on rehabilitation loans and loans to fiduciaries. So thanks again on behalf of the group, and we really appreciate your help.
Thank you, Bill. I appreciate the time.
And again, just to wrap up real quick, this is the LA County Real Estate Investors Association podcast. We do this every week, Tuesdays at 3 p.m., live stream on YouTube, Facebook, and LinkedIn. And this association with the event we do once a month on the second Thursday. We get 250 people, great speaker. It's free. And if you get there early, it's even free parking. And we have a vendors expo before that with 50 vendors. I'm one. We live stream the event, have a chance to meet professionals who can help you build your business, build your investment portfolio, give you the tools and systems that you need. Go to lareic.com. You can register online for the upcoming event. And in the next one, December 14th, is on out-of-state investing. I get asked all the time, I want to invest. I'm scared to invest in Los Angeles. How do I do that? And there's a way by coming to that program for free. So I'm Bill Gross, at Bill Gross Probate and social media. Thank you, everybody, for